Good morning, everyone. Happy Tuesday. I'm your host, Marcus Stoker D. This is the Euro Trade, where we look at some alternative markets such as precious metals, RBOB, crude oil, maybe some heating oil at some point, maybe even platinum, because platinum is a little less crazy than gold at the moment. But let's, for now, focus on copper before we go any further. If you're new here, a little bit about me. I've been trading for 18 years now, and 13 years out of that, I've been trading as a prop trader for various firms. I am Series 3 qualified, however, I'm not a CTA, and therefore everything you see today is for educational purposes only. Please familiarize yourself with the risk disclaimer that Bruno posted earlier in chat. Okay, so now that that's out of the way, let's see where we are. So yeah, I mean, a huge move down overnight as a continuation of the tariff madness. This is gold. Now gold has gone way too crazy for me. Is this a change of sentiment? We will know by the end of the day. Now, if gold pulls all the way up back into this former area of demand, I would deem that a decent reversal and some bargain hunters maybe stepping in. However, because of what's causing this, which is effectively the fundamental reason of tariffs and no trade deal yet, but potential trade deal, maybe, just maybe, we look at the end of the day to see how this is going to end. We have the end of the month as well, coming up on Friday. And we have the FOMC. So that might change the entire picture of this monthly candle. Like right now, it does look like we may end with a selling wick, but the month is not over yet. We still have 4 days, 3.5 days. So we'll see what happens. So that's gold. It's sort of at the moment like a benchmark for metals, and there's all somewhat following it. Now let's have a look at copper. Copper is a bit messier, obviously, but this is a monthly chart. It looks like it's in a range. Now, interestingly, that big smash that was pretty visible on the weekly chart is not nearly as crazy on this chart. I find that very interesting. So here is the big daily drop. There was another one earlier. Was there another one? Was that it? I don't know. Somehow it looked bigger. No, that was it. That was it. Yeah, so we are still comprised inside of it. We failed to reach these kind of low volume nodes up at 529.10. Now that's still there, right? That's still there. If I do this, you will see exactly where the line is. I'm using the visible range volume profile here. So that's looking to me like it's definitely attempting to go towards it. So I would be a little bit long biased on copper because of that. But obviously remains to be seen. What have I done there? I don't know. Remains to be seen what intraday wants to do. I never like shorts whenever I see that the nearby supplies have not been reactive right at the point of market shift price, which for this product is 508 evens. And it means that there are enough sellers to keep this down. So I'm, like I said, a little bit biased here to the long side on copper. What do we have on the 4-hour chart? Well, we have a localized demand here. Just gonna pop in this. And it's a pretty good quality demand as well. It's not really at the swing extreme because I would deem this more a consolidation, reaccumulation before we went higher. We closed the gap. And now we're touching the market shift point, the conterminous line on that 4-hour chart. So are there any longs here stepping in? We shall see. But before we do that, what do we need? We need Asia low, Asia high. So for now, Asia low, overnight low, is at 508.30. Same analysis that I do every single day for orientation. Let's call it overnight low because that's really kind of after Tokyo. And then where's the overnight high? That one. Okay. What do the quantitative extremes tell us? Well, quantitative extreme, let me just check the times because we're in a weird time of day of daylight savings in the UK that has kicked in, whereas it hasn't kicked in elsewhere. Yeah, okay, so average daily range low is sitting right at 506.60. So just underneath this whole structure. So there is a potential immediately there for them to wick it down to that area, past the overnight low, and then maybe look for the big volume candle to come in on a 5-minute chart. And perhaps we can then use that for orientation in order to look for a mean reversion. So that is how you would systematically look for a bottom of something to be set in, rather than going, oh, it's fallen too much, let me see if I can buy it. We need some indications that somebody with bigger pockets is going to effectively do the same thing as we are thinking, right? Otherwise, there's no point. You're just trying to catch a falling knife. So if it continues lower, I will be waiting for quite a long while for some kind of a pullback later on in the session. Usually pullbacks in copper and gold, they will come anywhere from COMEX open all the way into like the euro close, maybe even after 10 a.m. Option expiry in Forex, which has a knock-on effect on gold. So we will see whether there's any merit there. But just be very careful because these markets are super, super dangerous. Now, natural gas I find very interesting still, but unfortunately I don't think Topstep has rolled the contracts yet. We're still in X, and it should be in Z now. So until that changes, I can't trade it because it's the wrong month. So I might want to stay on copper today. Value areas. Where are COMEX values? COMEX value from yesterday is... Let me check what's going on there. Oh yeah, okay. Let me just change again for the daylight savings. Yeah, that looks a bit more sane. So COMEX value low, we're underneath it at the moment. So 514.40. 514.40, and we're gonna make that purple, just because. I also want it solid. Then COMEX value high is 1730. So as you can see, we are underneath it, hitting this 4-hour demand area with a point of control actually from the volume profile visible range right in the middle of that. So yeah, where this trade location is, there is room to the downside on the larger time frames, but I'm not that keen on getting involved into that because I think we're too low. For me, that's like way too low to be shorting anything, and I do need some sort of an intraday pullback before I can go into continued shorts. And the ADR high, we forgot to put that one, is up at 1985. So very close to this round number of 520. All right. Options. Options implied volatility low is actually right where we are now. It's similar to ADR. I sometimes match them up to see whether we can find some confluence there, but I think that they are probably going to hunt the low, the Asia low, just looking at context. Maybe they won't. Maybe they won't. But for now, we have GEX1, which is at 510. That's causing some trouble. Outside of that, I'm interested in where GEX2 is. And GEX2 is up at 515. So very close to this COMEX value low. So that would be my sort of point of interest, either as a target for any mean reversion longs, or maybe as a starting point for any continuation shorts. So that's 2 hypos already. There is a chance that COMEX gets stuck in a bit of a range. We do have FOMC tomorrow, and we have end of the month Friday. So it might be prudent to wait until all of that is over for any kind of more longer term positions, in case people are like bargain hunting on gold and stuff. Because I think we will have some new information that comes in, and it might be a bit surprising because they might need to adjust what they're doing. Messapetti says, hey, do you trade HD every day? No, not every day. I have a selection of about 6 products that I look at, and on any week I will usually pick about 3 of them. Some of them will be in monthly rollover. Some of them will be... so just notice that gold is hit ADR low. Actually, let's have a look at that because that's interesting. Sometimes if, let's say, energies are in rollover, I don't like to trade them. And then I will sort of move my attention towards something like platinum, or maybe even an equity index. But usually I for this time of the day, I would trade DAX, but obviously we don't have Eurex yet on Topstep. So yeah, for me, DAX for this time of day would be definitely almost an everyday thing. Like sometimes DAX goes a bit quiet and then I move away from it. But yeah, as soon as I start to experience some discomfort in a trade, for whatever reason, it could either be because nothing is moving and everything's just going sideways for like 2 hours, or because of the other extreme, which we have on gold, which is basically the range is going so massive that they are, like, however you spin it, you would need a pretty, either like approach it as NQ, just gonna go into a trade, grab a few ticks, come out. But that's not my style, right? So I need to be able to absorb any kind of intraday whipsaws with a sufficiently large stop loss. And I do have a scaling system for the stops. Now, I will tell you that gold ADR low was at 39.16. So I'm just going to put the coordinates here. So yeah, when gold went to over 1,000 ticks, that is basically a bit crazy for me. So right now gold is sitting at almost 1,200 ticks on an average daily range. So this is not like just one day. You know, I have an average that I take over a number of days where I figure out how much expected move that is. And that is NASDAQ territory right now. And also by the fact that the candles are just very, very large. Like I'm just looking at the ATR, just generally in a 30-minute time frame. That is measuring the average over the previous 9 candles for the way I do it. That's sitting at 174 ticks. And for me, I like to have enough space for my trades to absorb the intraday movement by about double that. So maybe not a full-on 100 and, you know, or 300 ticks, but I would definitely need like 220, I think. And I'm not, you know, not comfortable doing that because that's too much risk. Too much risk. Like maybe if you have a massive account and you can effectively still trade minis and use such a humongous stop, and then it doesn't make a dent in your account, but you certainly wouldn't be able to do it on, like, let's say a 50K combine and trade, like even trading 1 micro on gold using 220 ticks, that would be like $220 per trade of loss, and that represents over 10% per trade of the available maximum drawdown. So that's not a good approach. Therefore, if you're somebody in a 50K combine and you're struggling on micros and gold, that's probably why. And however you split it, it's just too much risk unless you have deeper pockets. So I am, you know, talking in the framework of most people situations, not like the odd few individuals who might be able to absorb the amount of risk necessary in ticks wise on gold. But yeah, I don't trade at HG every day. I will scan around during the week to see what the CME CVOL is doing. CVOL are volatility indexes for my commodity products, and then I will decide which one is, I guess you could call me more like sort of middle of the middle, because I don't like too much risk, I don't like too little risk either, I don't do too many trades, and I don't do too few trades either. So I like to trade about 3 trades per day, ideally, maybe 5 if there's something really interesting happening or there's a range developing. Right, we're seeing a little bit of a bounce here from this 8-year low on gold. So maybe we can have a look at very low time frames to see what's going on here. Right, we attempted to increase volume here on the reversal, but that's not been met with any follow through just yet. So that needs to change. And the options levels on end of day on gold are gone. They're like, where's the next option? And nobody sees it. So maybe if you have like with the correlated products, but that would not be. Don't think that's a good approach because it's like so far away. I would need to look at the intraday gamma flows to see what's going on. Let me have some coffee. All right, is volume going to follow this? So how I approach these sorts of setups where I'm potentially looking for mean reversion, but in a good way, right, is to look for, first and foremost, a 15-minute time frame candle with like the highest volume we may have had. Now, these are all like coping strategies that you normally would not need in normal environments, because normal environments, a lot of the days are distributed between like you know, mostly range bound with about 30% of days trending, and then maybe about 8 to 10% of days that are completely bonkers trending. It's like outlier days that cause limit up or limit down. But the way I would look at this is to look at the 15-minute higher volume candle that's nearby. So here it is. It's this one. And then to sort of use high and low of it, almost as if it's like another value area. And this is where me working with Topstep and having colleagues who have a completely different outlook than me, they give you ideas, right? So this is something that Coach Jay does on like a really low time frame, but I kind of flipped it around to suit some of my needs. So for example, right now we have a pretty big correlation between gold and copper. So that means that if gold turns around, I have an opportunity to maybe go into a similar trade in copper, right? But we do need some references here. So what am I looking for in gold? So looking at this is almost like a new value area. It's like a volume value where the most amount of volume has happened. So what do we want to see for a reversal? We want to see that the price actually goes back into it. So sort of accepting the high volume candle range. And then I would expect that to rotate. If that doesn't happen, I have no trade. And it's keeping me out of a really muppety moment where people want to just randomly go into mean reversions because there's, you know, an FVG somewhere. So we have to be very careful with the current price observations and where volume was traded, and whether we're actually accepting those areas or still rejecting them. And as you can see here, we touched that high volume area and went down towards 8-year low. What's volume doing? Well, right now it's meandering, but it could give me reasons to run my HG long trade earlier than its own ADR because the high correlation, and this one is a slower product. Now, copper at the moment still inside the initial balance, obviously, because we're so early. In about 5-6 minutes, we're going to have the close of the initial balance, and then maybe we can look at something. And because of daylight savings, we are in a bit of a weird week at the moment, because we run these shows by the CT time. I'm going to change this to this area. Green. Maybe even change the shade to green. There we go. And now the initial balance, wherever it creates the initial balance, we'll pop it in. But just for now, I do think we have a very decent chance of just creating the initial balance where it is here. And I'm going to make that red because I like red on my initial balances, just like we used to have on the old platforms. So let's see where they're going to extend it, and if they extend it or if they get stuck in it. But let's look at gold initial balance as well. Gold initial balance is absolutely enormous. 366 ticks is what the initial balance spans. Now, just as a reminder, only a few months ago, 120, 150 ticks was expected from gold as a normal initial balance. So that's a huge increase. How do I calculate ADRs? They are almost a volatility band that are dynamically calculated as the new day's high and low get created, and I calculate them anywhere from 10 to 40 days prior. It depends. I also have a weighted average. It takes in not just like the last 3 days, but the last like 1 and then 5 and then 10 and then 20, and then that becomes a weighted average. It's a little bit of a like, unless I start going and nerding out on you, then we're gonna lose people, you know. We're gonna lose people. But yeah, there's like little bits and tweaks that we've done over the years that we found works best. But they should be looked at as almost like a volatility band until one side gets exhausted, exceeded that particular day. Let's see if somebody's saying, Tori Mori, let's see if the put wall, I don't see a put wall today. At least not in the end of day options. Put wall, I don't even see a put wall. I see a call wall up at 520. Is there a put wall? Yeah, down at 455 and 450 from 0 DTEs and some longer dated options. There's a put wall in platinum. That might be something to look at. Actually, yeah, let's take a look at platinum. Platinum has a correlation of 0.7. Oh, I think my doggies are coming in. Oh, yeah. The older dude. Lenny has joined us. My coworker, my deaf coworker. I'm really his butler. That's what I am. There's no doubt about that. So yeah, let's have a look at platinum. Yeah, so gold's not holding, and for now I'm gonna hold off on this. Oh my god, Astrid has joined us as well. And who's this? Bernie. Yeah. Big Bernard and little Astrid. They're here. They're excited. They're very excited to be here. Right, platinum. Platinum has actually rolled into January contract already, like a month ago. So yeah, let's have a look at platinum levels, because that could be, because that looks a little different. So put support are down at 1510. And yes, I know for some people this is awfully boring, but hey, this is what trading is. We don't just click buttons. We have to have some sort of a strategy behind it that does not involve emotions. And where is my platinum chart? That might help with all my data points. There it is. Okay, so the ADR on platinum was at 1515.8. And it's close enough. And we just had the highest volume candle on a 15-minute time frame. This one. And that's what we're looking at. And we just had the initial balance also ending. How can I annotate this? Just trying to think of a way to make this a little bit more straightforward. I mean, the initial balance is all the way up here. Maybe we can do it with like Just like this. What would this do? And then initial balance just ended with a low down here. There we go. That's kind of clear, right? Different ways to annotate initial balance. And this one was here. So actually, let's remove this. I'm just trying to think what looks okay. And then this is our initial balance on copper. Right, so the idea on platinum now is if we go above this ADR low reclaim, it would be a put support bounce. Now, I will probably need a sizable stop loss for this one as well, and we're going to go on a combine. There are no micros. There are no micros in platinum. It's just $5 a pop. So let's see if we can get a couple of candles on the long side to go over this volume line. Can you see that? Let me have a look. Let's expand this so that you guys can see it. See that? This is a 2-minute chart. We do need the strong candle to take us outside of here, supported by volume, reclaiming ADR, and then we may have something. We may have a reversal at put support. But at the moment, close but no cigar. Glenn Close but no cigar. Do you remember that? There's a meme. It's like a picture of Glenn Close, the actress, and then but no cigar. I find that very funny. I don't know what is it with me and dad jokes. Like, I really like them. Does anybody else like dad jokes? Roy Lee is asking whether he can activate the combine, but he does need an additional $13 profit. Yeah, you will need to satisfy that before you can activate. High Volume says, good morning. Well, here in the States. Yeah, it's morning here as well. I'm interested to know a little bit more about how your Bookmap is set up. Do you have videos on your YouTube? I don't. I have videos that incorporate Bookmap, but I did not do a video on my setup. So should I do that on my channel? My channel is separate, obviously, to Topstep, and I've had it since like 2015. So yeah, maybe I can sit down because I have to do some filming today anyways. We're doing like some intros. Oh God, I'm gonna yawn. Don't want to yawn on stream. Yeah, so I need to film a couple of things today. So maybe I can show you my Bookmap settings. It doesn't have to be a long video. Now over here, it's a little bit tricky because we're supposed to stay on Topstep X, obviously. But yeah, so maybe I can do it on my own channel. And my channel is Market Stalker D. All right, we are still not really reversing. We are chopping around and trying to go below the put support now on platinum. So that means I am not touching this. But copper, copper is kind of like the YM of the metals. It's like yeah, we're all going massively down, and copper's saying, yeah, all right, guys, goodbye. Like, what? Didn't even take out the overnight low. It doesn't care. So this makes me think that maybe I should try copper trade. What sort of, so let's move away from platinum because that's just too low for any kind of shorts. But I'm gonna be, yeah, let's go down to micro copper because it's a bit too big. And then I will need to use a bigger stop here. So let's not nitpick and let's go for 70 ticks. And then we're going to be trading 5 micros, which is the same as trading 1 mini on a 35 tick stop. Now I will put the micro copper on this side. And then we can watch what is going on. So here is, let me look at the 5-minute chart. Yeah, so here is that big wick down before London opened. And now we're holding that. So out of all of the metals, copper seems the most sane one to kind of fish for these mean reversions. I don't know what gold is doing. Gold is just falling off a cliff. It's very suicidal, and that is cause for caution. Yes. But yeah, we'll see whether we can extend the initial balance here on copper. And I have adjusted my positioning to account for the additional volatility. Even though the initial balance is so far very normal sized on copper, it's only 59 ticks compared to 300 and something on gold. So that's palatable to me. That's very palatable. So we'll see. Massapetti says, thank you. Did you use level 2 data on all instruments? I do. Yeah, I would not trade without level 2 data, especially some of my alternative products that can be pretty low liquidity at times. So it's like, if you don't know where the orders are, you know, and I do have a large account elsewhere. So it's, you just can't get, like, for example, if I wanted to go in at 10:15 or something and there's nobody there and I need like a 3 tick spread, that wouldn't be the best choice. So really, if I want to, let's say I want to do 12 minis in copper, I would really need to get involved on the long side somewhere around 10:55 because that's where there are some contracts available for that size on the other side. Because remember, they have to match the orders, right? So yeah, I have level 2 data for everything. We'll see. And look, copper might get dragged down with the rest of the metals as well. But for now, the correlation seems to be falling off a little bit. So it was up at almost 1 during Asia. Now we've decoupled. How did Gwyneth Paltrow put her divorce to Chris Martin? Conscious decoupling. So is this a conscious decoupling on copper? Very possible, very possible. So yeah, I'm looking for 510 to hold because that is GEX1. And it can be sort of an accelerator level, especially when we're coming away from the implied volatility minimum, which is very similar to ADR low and can sometimes act in lieu of ADR low. So that's why all of that, to me, just little signs, little signs. So the next sign, if we do end up getting some strength here, would be to extend the initial balance. So that would be this blue line. And to then reclaim VWAP, maybe even get all the way up to the COMEX value low. But I would be looking for full rotation back up to 520s, maybe even more, depends on how the day sets up. TX chain hand. Please do not come here and post things like, buy this now. Are you a CTA? Are you registered with any regulatory bodies? If not, what you're doing is not very compliant with anything. So if you don't stop, we're going to have to imply some disciplinary measures. Be the sheriff. Bruno is our sheriff here. Why is the screen blurry on this channel? I have no idea. I am streaming at 1080p. Is your YouTube set to HD? I don't know. Paul H, hey, stops in GC right now need to be 75, 150 ticks. I think they need to be a little bigger than that, to be honest. Yeah. Have you got a video on how you calculate EDR and ATR? You know what? It's somewhat of a bit of a proprietary thing because I don't want it out there because we came up with it and it's quite frankly my intellectual property. But we are creating a utility Discord. We're also working on some other tools that might be available for other platforms. I'm just going to say that. Because obviously I have a software development company where we develop various order flow tools and stuff. But I can show you what I've been working on. So for example, I can show you that we've been working on a little bot, Blatic levels, and it basically automatically puts some levels in a nice format here. So this morning, and I don't have all of them, and obviously these are CQG things, but basically we do one at midnight that has the profile, and then throughout the day we have 2 more updates with the session ranges, and we also have that on equities as well. So that's something to consider whilst we're trying to create this for other platforms. But yeah, I will announce that when it's ready because I'm still doing the bot, making sure that it's actually doing stuff that it should be doing at the right times of day. So we are going to be supporting about 12 products, and just realized I made a little mistake there. So we're going to be supporting ES, NQ, YM out of the equities, GC, copper, silver, platinum for the metals. And then we're also going to be supporting crude oil, RBOB heating oil, and natural gas levels. And there will be probably 3 different things to sign up for. And then 1 general one where you get all of them. So that's kind of the workaround that we've been thinking of. Because a lot of you want my levels, and I needed a way to automate that rather than me kind of sitting there in Discord going, this is the level for this one, this is the level for this one. And since we have a software firm, so, you know, something there. Yeah, core wall, Tori, core wall is at 520 and 525. That's right. Well, 525 is actually GEX3. It's not exactly a core wall. It's not big enough. But it could be a stabilizer, definitely. Where do you see gold making a stop? Dude, if I knew the answer to that, I wouldn't run a hedge fund, but yeah, I would, I don't know, get a crystal ball and say, I think it's going to stop here. I don't know. I don't know. I can see the same chart as you. I can tell you that I have an assumption of how a mean reversion will look like. Where that mean reversion is going to happen, I cannot tell you, because that's not how I look at the market. So I look at the markets in the now. I don't look at the market and it's like, where is this going to stop? I'm just looking at it, how it's behaving right now. And I can see that it bled below ADR low, and we're still supporting this with some volume, right? So now we have another higher volume candle. And I can tell you that I don't know whether it's going to stop here, but if it does, we will see a move that holds above 39.20. So it's not about, oh, where will this stop? No, once it has stopped, you look for market structure to change to the opposite side. That's how you catch bottoms and tops. You don't catch them by going, I think this is going to stop at 3,900. Because it might not, right? But if it's already turning around, you're sort of just reacting on what is already there. So taking in data, such as we had a high volume candle on a 15-minute time frame, and that high volume candle now has gone into a different, and actually the way Coach Jay does it, he actually attaches a VWAP. So here it is. It's a 3-minute time frame. And then he also wants to see 3 candles that pump above the level. So is this now a reclaim of ADR? Personally, I like slightly bigger time frames. But there is a chance for a failed auction here. There is a chance. Do I want to get involved? Not for a million ticks. Because this is too much risk for me. But you know, if it holds above 39.20, that is definitely a setup. Do I think that combines and any accounts that doesn't have 6 actual figures in them, not like a nominal value of 150K, but an actual maximum drawdown of 150K, do I think anyone should be trading this? Probably not, because it's too much risk. If you have some balance in your XFA that's about 50K, maybe you can trade a micro too. But yeah, the risk of ruin is too high otherwise. So I'm going to stick with my copper. So I don't know where it's going to stop. Has it stopped? I don't know. We'll see. So I think the idea of how to catch mean reversions is maybe slightly wrong. There's a way to do it, and there's a suicidal way, and there is a slightly safer way. And the only reason why we might want to consider a mean reversion is because on the large time frames, we're expecting some bargain hunters to step in at some point. Because we have fallen. Let's see how much. They usually appear at about 15% drop off the high. They're institutional traders. Yeah, it's about 11%. So, I mean, really, 15% off the high would actually put us down at 37.40. Is there anything there? So what I want to do, while I wait for copper to do its thing, is to see where the previous top was. It's a bit further down. So how much of a drop would that be? Yeah, so from a swing point of view, or any kind of, let's say, an options trade that you might want to keep for a month or so, I would be looking for a drop at the very least down to 3,700. But really, usually they want to retest the breakout point. So that's something to look at. However, 15% falls right around 3,700. And another reason why I say that, because we do have this development here. and it just happens to align, this reaccumulation, it happens to align with the 15% drop. So this keeps falling, still have room. Now copper on the other side, the other hand, looks very, very different on its daily chart. This is just a minor reversal, and they didn't manage to even tag this high, which could mean that at some point they're going to go back after it. So we'll see. Because I don't like it when, like I said it in the beginning, when we have a market shift point from a previous drop, you would expect some sellers to appear like here, and they just didn't. So I reckon whenever you get that, you know that there's a very decent statistical chance that they go all the way back up where it came from. And then we've got this looming still. So low volume node that arguably has been tested already, and now we've just built volume because of this. And at some point, longer term picture, I would expect that to rise further. Rising up. Eye of the tiger, yeah. It's too early for singing. So, Tori, yeah, I didn't see the second chat. Sorry, just keeping track of chat is a bit difficult at this time of the day. So yeah, call wall is 520, and then 525 I have as a GEX 3. Now, out of interest, I do also have GEX 2 at 515, so that would be my first sort of stabilizer area if we ever get there. Yeah, there are some signs of copper still decoupling. Like we went from a correlation with gold by about what, like 0.91 factor 1 down to 0.47. So it's definitely gluing itself away from the monster that is gold. Difference, Tekka wants to know, difference between initial balance and opening range. Sorry, I just saw that. Opening range is 1 minute, traditionally. Initial balance is the first hour. So very simple and very different. Which platform do you recommend for reading order flow? Any, really. I mean, I personally like Bookmap because it smushes a whole bunch of things into the same type of a visual representation, I suppose. But yeah, you have time and sales nearly on every platform. If you have level 2 data, you'll get DOM, and then you will also get time and sales. Some people resonate more with time and sales. I do not. So this is what time and sales looks like. And if it's something on MQ, no, actually GC, because GC is moving, it's a little crazy. So just orders going through, orders going through, orders going through. And to me, I was never really able to remember all of this because I'm not much for like pure numbers. I like to see shapes and patterns. But when it's just pure numbers, I actually find them a little bit overwhelming. Whereas some people find Bookmap overwhelming, but I don't. I actually quite like it. So yeah. Right, getting a little bit of movement on the full contract on copper. So micros lag usually, especially for this time of day. But yes. Okay. Tori Mori says, I like your videos on your channel. They're funny. Yeah, I've always used humor to try and illustrate whatever I want to illustrate. Because, you know, trading is already quite cut and dry sort of thing. You know, obviously you have gambler YouTubers who are like, yes, go get it. And it's like, what are we, like 15? The height of adolescence? But yeah, so I always try to bring a little bit of humor, you know, put funny memes. Memes up because it kind of makes my day as well when I'm editing those videos. I actually chuckle like as I'm finding memes and stuff. What to do there? It's funny, you know, and I think people remember more about the concept when you attach something humorous to it. Right, so Bookmap, I will put the video up on my channel for my settings on Bookmap. Now, with Bookmap, I always have it connected through some kind of a demo TraderRate account because I find it very easy and the connection is pretty seamless. So I typically don't have it connected to like a live account or anything. But, you know, TraderRate, for some reason, they have a really, really good connector into Bookmap. I have used Ninja before, and that was a bit clunky because every time I changed the time frame, then I would have to reload the connector. So I didn't really resonate with that. It was just kind of messing with my workflow. So yeah, I'll create that. Actually, that shouldn't be too long. So I'll try and get that out to you. You know, just sit in front of the camera, show you my settings. Can even be a short. I don't really like doing shorts, but it can be a short. Okay, so Roy Lee says, wasn't sure if the extra 13 would be more than was allowed. Oh, yeah. So it didn't say on the combine, it didn't actually say it, that you needed to like pass an extra $13, but you went over by $13. That's nothing. Yeah, I think if you were over, like, there is a leeway. I don't know how much, but I think there's at least like maybe 1% or something. Because I know I've passed with 22 over one time, so. A trading gold London entry was a macro entry at 39.39. 39.39. London entry, 39.39. Okay. Yeah, but on any other day, and you say immaculate, but I mean, it's kind of trying to reverse now. And maybe in your eyes, capturing 10% of the overall daily range is something to celebrate. But usually if I can't catch 30 to 40%, that's not the objective. You know, that's kind of like catching, like, let's say you have something that moves 200 ticks in a day and you capture 20 ticks and you're like, wow, this is a good trade. It's a scalp. So you have to put it in perspective. Like, what exactly are you getting out of the overall available daily range? And I know that because of the craziness, it sounds like 200 is you know, oh wow, I caught a 200 tick move. But just be careful because a 200 tick move is barely like a 1 30-minute candle, right? Barely. In fact, 15 minutes has a bigger range than that. And if gold does gold things where it fails the auction and then turns around, if you're still in that, you're going to see those 200 point of profit melt in seconds and you won't have time to react. So this is why it's important to desensitize the position and what you expect from it to the volatility of the product. I don't want to hear anybody coming in here and going, I got 200 ticks on gold. Great. Was it a scalp? If you say, no, it was a swing trade, then I'm just going to turn into Homer Simpson and just go, because it means that everybody's just sitting on their ears. Because if gold, like I said, if gold fails the auction here from the ADR low, you basically traded the final sort of 0.5% straight into an ADR low On any other day when we don't have a million ticks to play with, that would be a terrible trade entry idea, because you're literally selling into the low of the day. Now, because of the unwinding, it might not be the case, but I'm seeing it really trying to fail the auction here around ADR. So if it reclaims 39.20, the 39.39 entry was not flawless at all, because if you try and hold that, you're going to get smacked in the face very quickly. So yeah, caution with the quality of the setups. That would be the setup that was only saved by the volatility of the product. But if you're not in it, then I would say that you're more of a scalper, which is not my objective. And just like it can melt, it can also turn around on you very quickly. I got you covered 38.50. Excellent. Yeah. But I would consider that a scalp, definitely. Yeah, RTY mini is a cheap mini. That's right. That's a good one. It's also in a slightly different story than the rest of the equities. I quite like RTY. Have you traded gold options? Yes, every so often. In fact, out of everything, so every time we get crazy volatility, I actually prefer to express my positions in options rather than outright futures. I don't know why anyone would be trading outright futures when this crazy range is happening. And with the options, yeah, implied volatility can definitely affect the option pricing. However, if you find a good area, you can then effectively run, and you're sure that, or you're reasonably good at figuring out the ends of swings. I would say that paying for a long option would be a very low risk way, a limited risk way to express the potential for bargain hunting and saying that buyers are going to step in, but you have to time those well as well. So, you know, for me, if I do anything in gold, like let's say if I see that this ADR is holding, I might pop in a, 1 or 2 days option to expiry. So I don't do that very often because, like, for example, natural gas, I am looking to run like a month-long option, but I'm just still kind of waiting for it to show me that we do want to go up. And right now it's still kind of consolidating and trying to decide what to do. But once we settle a day above a certain price point, even if it's intraday, yeah, I would try that. Right, so we are getting some movement here, even on platinum. So I'll show you platinum. So that platinum was very spiky, but the put support did end up working. We had another put wall at 1500 from 0 DTEs, but that one wasn't reached. It just missed it. However, the put support was reclaimed, so was the ADR. So everybody apart from gold is now starting to turn around. And that's actually a pretty good outlook for longs. Interesting. Right. I love you lots. Okay. I shorted gold a few times and held 1 micro after the last 1 hour. Green bar got beat, 800 points and counting. I'm guessing you did that in Asia, because London only had 496 tick move. I don't really trade Asia much at all. I traded like maybe 4 times a year. The daily maximum loss limit on live capital will follow your P&L or not? No. There is no scaling. There's many benefits to the live account, right? And one of them is that once you get placed in a live account, it's not another combine, right? It's not another combine. I suppose some people might look at it because you have an initial daily loss limit, but the MLL on all live accounts is 0, and then you have whatever balance you transferred there. So there is no intraday scaling. There's no any kind of a trailing on a live account is just not a thing. So it's literally like a real live account, but with risk. And it is a real live account. So as if you were to open your own personal one and put some money in there. It's the same, except you get access to the risk tools that Topstep provides for us on the back end. So you have things like the daily loss limit, and now it's scalable. So now you start wherever you are, like on the scaling. So you can start with 1K, 3K, but you know, some people who transfer, like for example, when I went in live last, it was a 4.5K daily loss limit immediate, not 3K. So before it used to be like 3K, but now they kind of scale it. And once you take payouts, that's also not taken away. It's kind of counted into what sort of a daily loss limit you should have, even though like your balance might dwindle, but you can still technically use whatever you have in there for a massive daily loss limit. Should you? Probably not. Probably not. But yeah, there's no trailing drawdowns. So combines and XFAs trail the maximum loss until you get over the hump of the initial drawdown. A live account is different, very different. I hear a live trader talking about it, but not sure. Which live trader? Not at Topstep. That would be... If somebody tells you that there's a maximum loss limit that trails in the live account, I can assure you that they're not with Topstep, because there's no such thing. No such thing. Right. Someone else saying the main thing is hitting the profit target within the 50% consistency rate. I've even passed the combine 100 plus over, but that wasn't an issue. Yeah, there probably wouldn't have been much of an issue on the 150Ks, but it might be an issue on 50Ks, purely because it's percentage based. So yeah. Is gold done selling since it hit 3,900? Maybe. I would still need it to reclaim 3,920 with quite some force. Right now we have a little Morningstar. And a potential for failed auction. So let's have a look at gold for a second. And let me mark up the initial balance, because I quite like these like little blue things. They nicely delineate. There we go. So it's obviously gone outside, created a single print, and now we're still floating around ADR low. So this is still a flimsy failed auction for now. We need some people to step in here. So there is a Morningstar on a 15-minute time frame, which can be considered a reversal pattern, but I don't like to see that until my price points are taken. And for me, I need to see that we hold above this high volume candle here. We haven't done that yet. So 39.20 on the account of this doji being the highest volume candle, and the top of it, we really need to hang above it, at least on a 15-minute time frame. If not, this is still a dangerous thing to play to the upside. and we wait. We might go into watching paint dry for a bit before LME because that usually happens around 9:30 London time. So yeah, it's all a bit messy this week. I don't like the daylight saving changes. It kind of messes with me. Yesterday I totally forgot that it should be an hour earlier. So I was like, right, so for my time, 5 p.m. should be day range fill. And I was looking at 6 p.m. and then I actually entered a position very late in natural gas. And I'm like, why isn't this moving? Why isn't this moving? And then I remembered that it was the end because it closed at 6:30. And I'm like, yeah, good going, Dee. You were just watching paint dry for 30 minutes because of that. Yeah, so no need to be greedy. Yeah, it's absolutely good. I will lock it up. If you're done for the day, you're done for the day. Go do something more fun. Is that 100K? No, it's 150K. Futures options or ETF options? For me, it's futures options. ETFs are a bit too slow. Like maybe if I'm doing like a spread or something, I would use something more stable because ETFs are slower. But if I'm looking for a long option play, which has a limited risk but unlimited rewards, I want something that will move as quickly as possible once I identify my swing point reversal. And I want it to happen within the 2 days from the start. Otherwise, if you're in a swing trade that starts lagging and then doesn't do anything for a week, you get time decay that comes and gets you. So you don't want that. So typically what I will do, I will run maybe a longer dated option because then time decay doesn't affect you much. But then I want the implied volatility to increase when they reverse and go into that single direction day. So that's usually how I like to play options because to me that has limited risk and all the upside that you may want out of a swing. So I've definitely use futures options over ETFs for that. Cedric says, thank you for the clarification on the live account. Top step #1 forever to me. Yeah, absolutely. Don't think many prop firms live are into trailing, usually end of day. I mean, that's a bit crap, isn't it? Like if you got to a live account, why would you want, like why? Why would you put the end of day trail? To me, that's very suspect, you see? Very suspect. It's like you need to give people the chance to do whatever they're going to do in the live and not put more shackles on them and make it like, to me, the end of day trailing in the new live on prop, on any prop, obviously excluding Topstep because they don't have that, that would be kind of like the old Forex prop firms that used to have a never-ending 5% trail on the funded account, basically setting you up for failure. So some of the things to look out for when it comes to unfavorable conditions that are set up for you to fail would be that, right? So, I gravitated towards firms always who don't have any scaling in the funded, not scaling, any trailing in the funded. They might have scaling, and that's actually good because they want to kind of slow you down a little bit because many people lose accounts. But nowadays, I think everybody's moving more towards the let's do the consistency rules. And consistency rules is nothing but a sort of like a soft daily loss limit to me. That's how I see it. So it's like they're capping your profits, but some of the firms also capping your drawdowns. So it's like some of them have, you can't go 30% into the drawdown from the starting balance. And it's like, that's a soft daily loss limit. Like there's no doubt about that. It's like, why is that suddenly a thing? But then, some of the other firms have the 20 or 30% consistency rule on the profits. So again, that's capping the profits. And really the only couple of companies that don't have that, they are Topstep and Trade Day. I don't, maybe you're into trade, but I haven't looked into them recently. However, out of all of them that I know, they're the only two companies that don't have it. So, what do you want? Do you want capped profits or do you want uncapped profits? I know what I wanted, right? Primer Rage TV says, looking at gold charts, hasn't it broken its last major support? You can't look at support in this way. Mean reversions will usually break everything until they reverse. So you have to look for reclaim of levels on super high liquidity products. It's not like, oh yeah, we're trading, an ETF and it's going to stop right where the support is. And then, no, it's going to wick massively through it and then kind of go back. That's the nature of the high volatility environments. Oh, I'm finally awake. Good morning. So yeah, it's the nature of high volatility environments. They will not respect levels on the first try. In fact, you need to expect them to be run through and then you watch what happens at the level. So, once volatility goes over a certain VIX number or C-vol number in gold or any other product, you have to use situational awareness to figure out if the level is getting reclaimed and how over, oh, it's broken. It's going to go, like, no, it's broken, but it got reclaimed. That's an entirely different situation than it got broken and sustained below it. So, it's going to help you a lot if you just stop looking at things in such a black and white way, because I think people were taught this idea of support and resistance on very large time frames from people who honestly did position trading and swing trading. They haven't really done much intraday trading. And then they had this idea that intraday support and resistance as a high and a low is going to stay. Guys, support and resistance on low time frames, they are liquidity areas. They are points where market makers generate liquidity. It's not to be the big bad wolf because they really don't care about your stops. But the problem that people have is that they placed it, like, look at where my stop is. It's quite far out, right? So even if they wick down below this area, my stop is still safe. Or it should be safe because it's at a completely nonsense number at like 507.65. 508 is the round number. So even if they tag that, I still have a pretty decent chance of my trade surviving. This is what I learned from swing trading. Never to put your stops right there. But what do people do? They take a trade. If I can ever find my way around this. So I'm looking for like long position. I think it's probably here. Yeah. So what they do, they enter a trade and then they put their stop like a tick or two ticks below, and then they're like, all right, and then I'm gonna shoot for like an enormous trade way past these trade here. No, let's shoot for million R all the way up here. And it's like a couple of points here. So first of all, your stop loss is at a really shit spot, right? Why? Because where is liquidity here? It's right underneath the most recent low. So what are you doing when you place a stop loss right underneath there? Asking for it. Asking for it. Maybe if they get smashed and then they move away from it, you can kind of justify it. Now, we already had a smash below the previous low here. So this is, and even that one, I'm still keeping my stop away from that low. But this is a low quality stop placement if you put your stop right there, like literally right there. So give your stop some room. Visually, if it's too close to here, that's not a good stop loss. So you really want it encompassing the low and then some. Okay, that makes for a much stronger position. And then if at that point, your new idea of looking at stops is also below the nearest round number, that is an excellently strong position that can survive any sort of intraday whipsaws. unless you're completely wrong and this runs you over, that is when the trade will be invalidated. So you would effectively need it to invalidate 2 areas here and to sustain below the round number. So think about that when you are talking about stops and liquidity. So when it comes to the targets, some people are wildly ambitious. I would say that I'm pretty ambitious with my targets, but I stick to 2 and 3R on most occasions. Only when I see a potential for a reversal, then I might enter a trade and then decide to extend it, because I'm seeing that we're going into a single direction day. And on those days, yes, I can capture 300, 400, 500, 600 ticks sometimes. Most times it will be about 300 though. And those will be on the days when the market is not super crazy. So I'm actually able to catch those on a 35 tick stop. And yes, those sometimes happen. Do they happen every week? No, they're once in a blue moon, usually once a month, maybe twice a month, if anything is kind of moving from zone to zone. But generally, those are rare setups. So if you come into the market expecting that somehow you will nitpick on the stops and then your risk reward will be like 9R every single day, that is not realistic. Singles and doubles are the most realistic things that you can get in the market. I'm in favor of doubles, so I look for the profit margin to at least have the available 2R. But if it doesn't, maybe it's a range day, I will be okay with a single 1-to-1, but only if it's a range day and I don't have enough space to maneuver anything. Does that make sense? Contango says, when people talk technical analysis, all I hear is the teacher of Charlie Brown. Yeah. Nice coat, D. It's actually a cardigan. It's a winter cardigan. I have 2 of these because I like them so much that I bought 2. But it's gone a little bit nippy over here. So yeah, I have my winter clothes. Coach Jay said it's very Hollywood. So yeah. Angie says, D, would you please talk more about how to read volume profile? Low volume nodes, high volume nodes, point of control. That's about it. So volume profile, I usually use it on larger time frames because for intraday, I use market profile, which is, for me, more in depth and has more resolution. So volume profile, if we look at gold here, from a very large time frame, we see that we have a sticky outy area here where we build some volume. But you see, the way I look at the markets, I can see that already, even just by looking at pure price action. However, this is where the point of control is. Now, point of control is not a control of anything. It's just an area where the widest profile is. Does it mean that they built volume? Not quite. So what it means is that the price consolidated, building volume over time. Doesn't mean that we suddenly had a lot of volume in a single candle on the day and then it moved. So from that perspective, it's a very good target, but it's not, for me, a very good starting point, unless you have some reason to suspect that you might go into some crazy move somewhere. And then you kind of look for strength or weakness. Further weakness would be, in this case, in and around POC, but you're bound to have some sort of slowdown there. Now, when it comes to the low volume areas versus high volume nodes, so LVN and HVNs, you would expect them to act as kind of like single prints because that's what they are. So at the moment, you can see we have a low volume area in this section to the downside, right? So right now, if the market, let's say tomorrow, goes into the low volume node and is unable to go above 39.29, that means we may have more room to trade towards the previous high volume point of control. Okay. Now, if you have more obvious areas of lower volume, let me see if I can maybe use copper for that purpose. So on copper, you have a very, very obvious low volume area here. It almost looks like a hole. It looks like a cave. It's a bear cave. So usually you expect the prices to test those on the first try as a reversal point. But the more times it gets tested, the more times it's likely to get taken out. Single prints. You can look at it as a massive FVG, like whatever you want to call it. I know them as low volume nodes and or single prints from large time frame profiles. So the first run means we look for a reversal, first test. Subsequent attacks on the low volume area can actually bring a pretty quick move through it. Now, for me, the reversals are quicker because once that first test comes, like blink and you'll miss it. So you have to be aware of them. But high volume nodes will cause slowdowns in price, and they're more like supply demand. So you can see there's a supply up here. You can see there's a huge demand here. And it could be a reaccumulation before we go higher. It could also be a creation of a new supply if we melt all the way down past this low, because this is now a range. But yeah, it's hopefully that's helpful. And that's all I do with volume profile. Now on market profile, there's other things. There's specific playbooks that you can take off the failure of the auction based on the initial balance in the first hour range. You can have an auction fade when the market goes into a normal or normal variation day, and then you can fade that back up to the initial balance, high or low, whatever the nearest edge is. You can have the value area bounce. And to me, market profile has more accurate data points than volume profile. I don't know why. Just in my products, it kind of sets up like this. So yeah, those are a couple of ways of using volume profile. So hopefully that's helpful. Right, this is taking forever. So I am going to get out of this and wait for a better time of day. So a little tiny little buffer. Okay, let's have a couple more questions and then we're going to be at time. For TPT live, I don't know. All right, I'm trailing stops at buffer, no scaling up because there's no daily stop loss. Yeah. Volume profile is the amount of candle space in the specified sector of the chart. Yeah, that's a very good way to put it. Why don't you raise your stop loss above the entry price to secure profits? Because if that kept going and I got stopped out because we ran into a bit of a pullback that makes 0 sense in the market structure, then I would have a big fat 0. I don't move my stops because if you go to look at the probabilities of the setups and the, because I've been doing mechanical trading systems for a long time now, probably for about 8 years. Whenever we created something that trailed the stop, it derailed the profits completely. And then somebody is like, oh yeah, but the accuracy is bigger. Yeah, but the gains were completely smashed. And I also saw that myself when I was a swing trader, where I was also, I heard, I wasn't taught that because the guy that taught me how to trade was not in favor of trailing. And I was like, but you know, protect the position. It's false economy. Unless you have a reason to trail your stop, especially intraday, if you're looking for more of a mean reversion trade, you need to let it breathe. We're risk takers. We're supposed to be taking risk. And yet most of you spend most of your time avoiding pain and avoiding risk. I'm not like that. I'm fully committed to most of the trades that I take. And only if they are really not working after like 2 hours, I will consider taking all of it off. Why put it to break even where you can have 56 bucks? Why wait for it to hit to 0 and then I'm down commissions when I can have 56? If I think that the trade is not valid anymore to the point that, oh yeah, let me protect the position. So what are you protecting? You're not protecting profits. You're protecting some random entry point that now should not be a stop loss. The stop loss should be here, down here where my original stop loss was, 765. So look at it now. Now it's coming back on me. So if I use your example, this would come back down to retest my entry, and it always does intraday. Always, there's at least one entry test before they take it wherever they're going to take it. And then according to you, I should just protect my position for what, peanuts, and then put it to what, two ticks above break even. And then what do I have? I have commission costs, and then this moves 300 ticks in my favor. And then what do I have? I have commission costs. So it made nothing. Over the years, all of the 18 years, I have learned not to mess with my stop losses. And I'm perfectly fine with that. If you're not, that's your style. You don't have to do what I do. I just know that for me, generating profits involves a certain amount of risk. And if I don't think that a stop loss is valid up where you wanted me to place it at break even, because it makes no sense in structure, maybe if we make another low and then another low, then I will have 2 inside lows that I can maybe move my stop to, but I still wouldn't. Because if I think that the position is going the opposite way, I'm just going to exit it. I'm not going to wait until it turns around. I'm going to take what's on the table already. Whether that's 1R, 0.8R, 1.2, or 2.5R, I don't care. I will deem that the trade is no longer valid, and then I will act on it and take as much that I have at that point. So I could have 0 minus commissions, or I could have 56 bucks. Which one is better? But obviously, if you're somebody who just stands there and looks at your trade going into a drawdown after it was in profit for 200 ticks, and then you let it go all the way down, and then it's going into a drawdown, and it's going into a drawdown, and then it stops you out. Yeah, obviously you need different risk measures and risk controls to prevent you from doing that. But I don't have that problem, okay? So trading stops, to me, has never worked. It derails the profit targets and the gains and the profit factor, overall profit factor of the bots that I've created over the years. And I am not moving my stops. I'm sorry. You can be against that. But it's just my way. Do you ever manually close your trade even when your stops are set? Oh yeah, all the time. Yeah, my profit targets are always just, because we don't know where the target is going to be. We don't know where the market will move. Nobody knows. You know, I have an idea that, for example, this copper trade might move to 515 and 520 eventually, but will it? I don't know. So if it gets to, let's say, 514, and then we get to a time of day when everything slows down, and we just never really made it there, what am I going to do? Sit and watch it? No, I'm going to take the profits early. And I have multiple ways of taking the profits slightly ahead of the target. Because I'm not going to be a, excuse my language, dick for a tick, okay? I'm not somebody who's like, well, I've got it up at 5:15 and I need to get to 5:15 right now. It's like, dude, 14.50 is good enough for me, you know? It's like, I'll take that. It's fine. It's enough. Anything over 1.3R to me intraday, it's a brilliant trade, right? If it gets to 2R, that's like, boom, right? Trade done, full target done. Only on days when we have those big potentially reversing days from large areas, then I would consider, oh yeah, let's do maybe 3 or 4R or 6 or 7R. Let's just let it run all day. And I'm perfectly able to do that. On copper, I usually do that for CPI and PPI days when it goes above the Asia range and then sticks there. I would just leave it literally running for like 7 hours. So I get every single tick that I can up to like LME close. And then I'm like, okay, we'll take profits now. So I do open up my targets on some days when I know that there's a possibility because of the CPI, PPR or something, that we're going to get there. So yeah. All right. One final thing from Ethan. I just wanted to say Topstep is very goated. Having these live streams makes it a lot less lonely and scary when I'm starting out. Absolutely. Yeah, this is what we're here for. Hey, I even used to get lonely before I was with Topstep, right? So some people are, usually Andre asks me, you know, what are you doing for you know, are you going anywhere, D? And I'm like, this is my social, Dre. This is my social. You're it. So yeah, I am somebody who lives a very quiet life, and I love my Topstep community. I love my Topsteppers. I love my colleagues. Like today, I'm doing a live session with Hogue for my VIPs, and Hogue and I have known each other for so many years, so it's always good. I had a session with Coach Vince, and I don't really get to work much with him, so it was very good for us to sit down, because we're both profile traders, and it's like very natural for us to talk through setups and how we're seeing the market. And it's beautiful, you know, and I was actually very sad when Topstep Squawk Radio stopped happening back in the day, because I've been with Topstep for 10 years, and I was a guest on that. So obviously now that we have TopstepTV and this huge YouTube channel, and, you know, all of you, and especially my Euro crowd, you guys are very polite. You always ask very intelligent questions. You're very funny as well. And we all appreciate that. Don't think that we don't see it. And we know all of your names and, you know, all of your usernames. And we know that you're here with the intention to learn, and maybe intention to just socialize and be less lonely. And we're here for you. That's all I have for you now. I will see you again tomorrow, also for another early one, because it is the daylight savings. Thank you for hanging with me and spending time with me. I really appreciate it. This was the Eurotrade. I'm Marcus Stoker D, and I will see you very soon. Take care.